Hey, good afternoon, everyone. Good morning if you're in Honolulu. It's about 7 a.m. Honolulu time. We made it a little later to do our daily update today. We wanted to see how this market kind of reacted to the morning session and stuff. It doesn't look like it's getting any better. We know it's big witching day today on options, so there's that volatility too. The VIX is starting to push towards that 20. It's just a sliver off that 20, which really signals some volatility coming into the market. This might just be a little cleanse, right? After the Fed meeting and some fears over rate hikes and tapering and things like that. There might just be some normal fear kind of digesting through the market right now. We'll see. We're sticking to our guns with our energy play, and that's turning out well, right? Oil had a nice bounce today, pushing back towards that 72 level. Really the only bullish thing out there right now. Even cryptos, right, when kind of in the crapper today. Let's pop on over to the CNBC and see what they're up to. And you can see right now, let's refresh this. All right. You can see the Dow's down about 1.25%, S&P's down 1%, Nasdaq's down about 0.5%, a little bit more than that. And that VIX is trickling up in that 19s, mid-19s. It was in the high 19s a little earlier. We're coming out of lunch right now, right? Europe closing lunch, all this stuff going on. So we'll see how it digests into the afternoon, guys. We'll stick with that Twitter short. Twitter got a little feisty, right, in the last hour or so. You can see it's up bucking the market trend. But if you look at over the last couple of days, it's starting to set this pattern of lower highs and lower lows. And so we'll stick with this. That's why we gave ourselves about 3-4 weeks on the contracts. And outside of energy, that's our only play right now. We think this little bearishness will carry over into next week. At least to a certain extent, especially since you got some of these guys like Bullard coming out and saying he's pushing that 2023 rate hike into 2022. So we're getting closer to the end of the year like we're predicting. So it's kind of interesting, right? Other than that, there's just not a whole lot of news this morning, and you can see it in the market, right? Kramer, of course, is going with the market. You know, if we're at new highs, you should buy more. If you're at new lows, you should step back and wait. It's funny. That's the same guy that in December and January was telling us he was comfortable buying stocks at those levels, right? You know, at some point we talked about it, right? The policy and things like that going on. Whether anybody wants to admit it or not, with the kind of a stunting growth with your labor reports last week, your inflation reports coming out hot. A lot of excuses made with transitional, the word transitional, right? That's the new buzzword right now. It's all transitional, okay? We'll see. We'll know over the next couple of weeks, but we don't think this market's going to rally hard off this right now. It might be a few weeks before we even resemble an all-time high again. So we'll see how that works out, guys. You can see as we're talking that market's just kind of stuck right now. It's Friday. Besides those option players with the witching and stuff like that and your normal day traders, there's probably not a lot of activity going on in the market. And let's pop on over and look at some charts. And you can see there's your year Dow chart, right? Coming off that high, one top, two top. That might be a double top. It lost that support that it set back in May. And now it's kind of working on this here, going all the way back to March. So we'll see how that works out. Let's pop on over to an S&P 500. Now, yesterday, the S&P 500 got big help from Apple, right? Let's move that handsome guy out of the way. It got a big push from Apple yesterday, the S&P 500 and the NASDAQ. Apple was pushing that 131, 132 level. Apple's pulled back today, and you can kind of see the effect. Look, if these leaders don't lead, I know it sounds fuddish and boomerish and stuff like that, but if these leaders don't lead, your Apple, your Microsoft, your Facebooks and stuff like that, this market just doesn't have the gas. It doesn't have the nitrous to get to all-time highs again. So we'll see how that works out. Now, the NASDAQ is showing a little bit more strength than the other markets. Tech is showing more strength, and you can see it in the chart, right? Let's do a 1-year chart on this one for comparison. You can see that thing's still trading right around that all-time high, despite what happened yesterday, right? It had a nice green day. It was led by the leaders. And, you know, just for fun, let's go over and let's pop on over to CNBC and see what Apple's up to. You can see Apple. It's lost at 132, but it's holding pretty strong, right? All things considered, it's down about 0.5%. And if you go across the board, right, let's go look at Google. You can see Google's not really up, not really down. I mean, a $2,000, or excuse me, yeah, $2,000 stock down 0.5% is not much. Let's go see the other big boys. Let's see Facebook. You can see Facebook even. It's down about 1%, but that's probably a little bit of a market action. These have to lead in order for that S&P to get over that hump. And they really helped the NASDAQ yesterday. And your high flyers, your cult stocks really helped yesterday. And you can see that's why we're sticking with that Twitter short right now. We'll see how it reacts when it hits that $61 level again. Yesterday, it pulled right back off that. This morning, it got low, pretty much almost lost $60 this morning. So we'll see if that continues. Don't be impatient with your trades, guys. Let's pop on over to oil. What's more fun than oil right now? Well, not even a barrel of monkeys. You can see we're pushing back to that $72 level. Now, the oil stocks we're in right now that we've been talking about, the MRO, the ET, and the SU, the Suncor, those are still taking a little bit of a hit, but those are kind of going with the market flow right now. And also, too, a lot of them were down 5-6% yesterday, so it has to digest that selling. It's like I've been talking to you about Bitcoin, which, by the way, we'll be doing a crypto show right after this. Let's go look at cryptos, see what's up with those. You can see Bitcoin's back down around that 36,000. Ethereum's down. The Ether coin's down about 2,200 again. And just across the board, it's a real bearish tone right now. It's an overall money bearish tone right now. People are kind of trying to disseminate that information from the Fed and stuff. And it's probably going to carry into next week a little bit. So we'll stay where we're positioned right now. And we'll let the market tell us when it's time to get in, or if it is time to get in, or maybe it's time to go even more short, right? You never know. So look, guys, you guys have a great weekend. Okay. It's Aloha Friday. Go enjoy the weekend. Market closes in about 2.5, 3 hours. You know what I mean? If you're trying to make your money now, you're probably behind the cue ball, or the 8 ball. Is that the saying? Cue ball, 8 ball. Anyways, tune in for the crypto show. All right. I know this one was a little boring. It's just a down market right now, and it's hard to get a finger on the pulse right now. So we'll let it kind of digest a little bit. That was probably the smartest advice we saw on the internet this morning, was Jim Cramer coming out and saying, step back, let it kind of work out, and then look for your opportunities. So, and we'll do that, right? Other than that, guys, like I said, you have a great Aloha Friday. You guys have a great weekend. I will see you Monday.